Good day, friends. This video is dedicated to beginners who are taking their first steps in trading options. In this video, I want to answer the most popular beginners' questions: how to learn how to trade options on the stock exchange, which strategies should be used by a beginner and which ones should not, how much money do I need to start trading. Indeed, there is a problem in theoretical education for options trading. There is a big gap between book knowledge and practical skills of options trading. I try to eliminate this gap, but the willingness of the beginner is also important. For example, when I started trading options 20 years ago, I didn't have the opportunity to ask anyone anything. There was simply no experts on options trading. The options trading market was just starting up. The only information I had was books like this. Take a look for yourself. 1,200 pages. Lawrence Macmillan. I highly recommend this book for study. Options as a Strategic Investment. Wonderful book. 1,200 pages, but unfortunately the book has a very poor relation to practice. In the book, there are no real examples that exist in the current market. Book knowledge, though valuable, is far from reality. The market is changing. Trading instruments are changing. Trading conditions are changing. Therefore, I believe our options and futures exchange has done a good job of creating the most comfortable trading conditions for beginners. First, I will leave a link in the video description or in the comments to my Options Are Easy video tutorial series. There are about 20 video lessons in the series, and I have tried to give information about options trading as short and accessible as possible. Terms, strategies, risks, returns, margin requirements, everything that will be useful to a beginner, I have covered there. So please use it, it's free and fully accessible. Also, at our AE website, you can visit our services page, and at the bottom you will find a link to the AE game circuit. There you will be able to test your strategies, look at the calculations, check the level of risk and profitability without affecting your wallet. So, what is the best strategy to start trading with? If you expect to trade basing on the price and market movements, then I advise you to use vertical spreads. These are the simplest strategies that have a stop loss and take profit. Strategies that allow you to trade in a trading range are also good. For example, the strategy that is on the screen right now is a sold triangle, and additional leverage is bought here to protect our position from strong growth. Call option sold, call option bought, the right side is protected. But there's no protection on the left side. Heavy risk if the price goes down. Beginners often do not pay attention to the potential risk of a strategy. For example, you trade Bitcoin options. Working with 1,000 options, you have a risk of 1 Bitcoin. If you trade Ether, 1 Ether is 100 contracts. Back to Bitcoin, if I trade not 1,000 contracts, but 100, I have a risk of 0.1 Bitcoin. It's always important to understand clearly how much risk we're taking on. I do not recommend using naked buy and naked sell strategies, because with a naked buy you just lose the premium of the options. It is too difficult to guess the price movement. If you use vertical spreads, the premiums will be lower there, because you bought 1 Bitcoin, sold 1 Bitcoin, the loss becomes smaller. But if you only bought options for 1 Bitcoin, the potential loss is huge. When you sell naked options, you have to know how to hedge or roll your strategy properly. Otherwise, there will be serious losses. So, the first step in learning how to trade options is delta hedging. With this, you will be able to protect your strategies from unfavorable market movements. Delta hedging can save strategies where rolling cannot. And to summarize all the above, I recommend using vertical spreads for directional trading and figure out delta hedging as soon as possible. Options offer great opportunities to make money, but also great risks. So the main question is not how to make money, but how not to lose money. Therefore, it is very important to learn how to manage risks and use delta hedging. It is also very important for a beginner to understand what volatility and historical volatilities are. Volatility indicators are available in both desktop and web terminals. They are always here and always up to date. Based on this data, you can make decisions whether you buy options or not, whether they are overvalued or undervalued. Options trading is trading volatility, trading the changeability of the price of an asset. This is why it is important. The AE exchange provides all trading opportunities, including algorithmic trading. In the arsenal of AE exchange, there is a huge number of robots for delta hedging and strategy control. But now let's talk about how much money you need to start trading options. As I said, you can start in the game trading mode, where you get 0.1 Bitcoin or 1000 virtual USDT to try trading, and 1 AE token is required to pay the exchange commission. Game trading mode is mainly used by our developers to test new robots. Game mode is necessary for beginners to understand the interface and robots. But to start earning money, you need to go to the exchange itself. To start trading, you need a small amount of money. Options are a very affordable tool. This is not CME, where it takes several $1,000s to provide options and delta hedging. On the AE exchange, options are affordable. Even having 100 USDT, you can open small strategies for Bitcoin and Ether, for example. I believe that AE exchange can be great launching pad for high-budget trading. If you have mastered options trading, you will be able to trade on all stock exchanges. Options are the same everywhere. The strategies are the same. The option calculations are the same, based on the Black-Scholes model. Delta hedging is used everywhere. I'll say it again, you don't need a lot of money to start, and you can trade in-game circuit with virtual funds. But I think that when one trades with virtual funds, one is not motivated to learn and develop. Real-life trading is much more useful for development. Spend a small amount of money to learn from real market lessons. Options are a very flexible instrument that allows you to make money on any market condition. Rising asset price, falling price, and when the price does not change much. Any price scenario. Options are financial engineering. It is a very serious thing. So the time you spend on learning and practicing will definitely pay off. But again, it is very important to know how to manage risks. There are many courses that explain how to sell options but do not explain how to manage risks. Of course, selling options is profitable, but you can't do it forever. At first, there is profit, but then there is a price movement that will simply destroy your trading account. That's why it's important to manage risk. Turn on delta hedge, apply rolling, or fix a loss in time. As always, ask questions in the comments. If this video was useful to you, put a like and subscribe to the channel. I wish you good luck and successful options trading.